What's going on, everyone? Gilman with Wellthy Stocks, back with our daily Apple update video where we take a look at how Apple stock traded today, key levels of support and resistance that we are looking at moving into the future, and based on that, what we think Apple stock could do. So real quick, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. So let me hit record and we will get right into it. Another bad day for Apple, but overall a terrible day for the stock market, right? All indexes are down, some down more than others, and it was just not a great day overall. So let's dig deep into what exactly is going on. So a couple things that I want to cover real quick about the general market. First things first, right? We saw the GameStop thing happen again. Now, it's up over 80-90% on the day. That could be, money movement to GameStop, some short covering in GameStop. I don't necessarily think that it was the leading cause of this. Don't even know if I should really mention it, but it is something that maybe made it a little bit worse than it could have been had there been no GameStop run happening again. The other thing, and I think this is more of the reason why, is just A, we were a little bit extended, right? That's something that we knew. And B, with bond yields climbing, what we are getting is bond yields today reached 1.6%, which is pretty darn close to the S&P's dividend yield, right? So that's sort of concerning, right? Because here's what we see here, right? So the 10-year Treasury bond is typically what we look at as a benchmark for bond yield, right? And what they're talking about is, look, on one hand, the S&P 500 is, the dividend yield on S&P 500 is about 1.5%. But you are still taking on the market risk in the stock market by having the S&P 500 in your portfolio. So if you're an investor and you're looking for a safe investment and the S&P yields 1.5%, granted S&P, a lot of what you're going to get is that growth, right? But with a lot of valuation and some stocks being super extended, what we're also getting is a little bit of worry. So what some investors are doing is they're transferring money into potentially transferring money into the bond market because they're getting a similar dividend yield as the S&P 500. But remember that the U.S. Treasury bonds are risk-free. Now, nothing's really risk-free, but if you're looking at the financial markets, that is the risk-free kind of best comparable that you have. It's considered the risk-free rate. So that's what I think is the main reason for this downfall. Now let's get right into the analysis on Apple itself, and we'll see what the heckity heck is going on. So we are down $4.36 on the day, which is about 3.48%. Now, when we compare that to the NASDAQ, right, the NASDAQ is down at 3.5%. So right in line with Apple right there. Dow Jones down 555 points. Look at the Dow being down for a change as well. And actually, 1.74% actually wasn't bad, right? It's about half of what the NASDAQ was. And the S&P was down 2.4% as well. And, Apple is 3.5%, pretty much in line with the NASDAQ. So not super worried there. Now, let's get right into the analysis, and then there's a couple things that I want to share. So yesterday I talked about, hey, it was, we closed here in the 125s, and I talked about, hey, it's important for us to break 126s, and then we go to 128. The way I do my analysis is I look at levels, right? I'm not going to say Apple to 130 because to get to 130, Apple has to go through certain levels. So I said 126.60s was the first level. Clearly, we made a push towards it at the beginning of the day, right? And it was looking like a nice day. And then we got rejected kind of right before that, right? About 19 cents away. And from that point, it was not a great day overall. So bounce down, right? And that's when we start to look at our support levels, when we start heading down. First support level was 123.69, got a decent bounce going up to VWAP. Didn't quite make it, came right back down, tried to make it above this level, and then broke below. This time, broke below it for good. Kept dropping briefly, went below our 121.48 level. Again, came above it, and then rejected by VWAP, and then went right back down, 120.54, pushed up, and then ended below our 121.48 level once again. The reason I have these levels and the reason I have the VWAP is it can be a perfect indicator of where we're headed. I don't know where the stock's headed for sure. You don't know where the stock's headed for sure. I know that long-term Apple's going to go up from here, but it could go down even further, right? But what we do know, or what we kind of have an understanding of, is these levels are levels where if we're going up, we could get rejected, and if we're going down, we could get a bounce. We did get a bounce here, but the selling pressure was too much that we broke below it. We did get a bounce here, but the View app rejected it, and then we came right back down, right? So these levels are a really good tool for us to use. If you don't believe in these levels, I don't know what to tell you. I've seen some comments saying, oh, you can read charts, great. Well, I don't know, what else can you do, right? It's the stock market. Let's talk about levels of support, levels of resistance, you guys. And we are now, for the third day closing, or actually fourth day, right? We barely closed below it on Monday as well. So every day so far this week, we are closing below the 89 EMA, which I'll point out later in the video as well, but we haven't really closed below in a while, and continue to close below it since like 2019. So let's take a look at that. But future levels of support, future levels of resistance. So let's talk about, levels of support if we were to drop even further what we have. The first level that we have, you guys, is today's low of 120.54, so the mid 120s. Not too far from that right now, right? The next level that we have, if we crack 120s, is 119.09, and then we've got the 116.99, right? So 119.09, 116.99 are the two levels that I'm looking at if we continue to head down. On the other side, if we start to push up, this 121.48 level that we broke below towards the end of the day today is our first level of resistance. And then 123.69 is our second level of resistance, and then hopefully a push towards 126. Remember that we have gotten rejected from 126 2 days ago, as well as today. So that's something to keep in mind. 126.60s is kind of a crucial level that I'm looking at if we do start to go up and we break above the 121.48 and the 123.69 level. The 126.60s is kind of an important level to watch because we've struggled to break through it in the past couple of days. Let me get rid of these drawings here for just a second. Those are my levels of support and resistance that I'm looking at. And I want to point out a couple things. Now, I've already talked about this before. I'm going to zoom out and move back. So if you take a look here, right, Apple has rarely ever touched even this line. Okay, in the past year since the COVID drop, we've touched it 3 times, 2 times. We didn't even touch it here. Back in September, we touched it for a day. Not even touched it actually then. The only time we really touched it was back here in early November. Before that, we've come below the 55 and gone towards the 89, but bounced below. We touched the 89. We have to go, the COVID time, I'm not really counting because that was just, the market being the market. The other time we saw this happening was mid-2019, you guys, when there was a broader market sell-off, but more specifically related to Apple, that we dropped below it and then stayed below it for a couple weeks, right? So that's why this 89 is a crucial level. It also happens to be, kind of that level in the 126s where we've gotten rejected a couple times. So it's at 126.12 currently. So again, hoping for a capture of that. Not necessarily sure that it's going to happen tomorrow because we are talking a $5-6 climb for it to even get close to there, right? Which, this is a pretty bloody day, so we'd need a pretty green day for us to get there. But I do think it's going to happen. I don't know if it's going to happen, sometime, next week. I also don't know if we're, done dropping. The reason being, if we take a look at the NASDAQ, right, the NASDAQ is now below the 55 EMA, and it's got run room down to the 89 EMA, which would be another, 400, 500 point drop. Similar to what we got today, and similarly with the S&P 500, right? If we go back, the S&P 500 has done a really good job of bouncing off of these EMAs. So the reason I like looking at these EMAs is because they are really good for providing levels of support, right? We go back to 129, January 29. Here, we bounced off of the 55 EMA. So that gives me a little bit of hope that if we were to go down to the 55 EMA, which is still, about $5 or so away, which is another 1.5% drop, we could bounce there just like we did in end of January. Maybe we start to push right back up. But times before that, we've bounced off the 34 EMA, which is our third line of support. And then back here in, late October and, late September when the market wasn't really playing nice, We dropped below the 89 EMA, right? But here we stayed below it for 4 days. Here we stayed below it for 3 days, not even 3 days. We came back the third day. But yeah, so, you know, periodically, as we see here in June 2020, we've dropped to the 55 EMA, 55 EMA, below 89 EMA, below 89 EMA, 55 EMA, right? So if we don't see a bounce at the 55 EMA, what I'm saying is we do have run room down to the 89 EMA, which would be, I mean, it's not terrible. It's in about another $13, which we got $9 today. So it'd be, you know, 1.5 times what we got today. But again, looking for, you know, a run down, or the possibility of a run down to the 378s, which is about a $4 drop, which is about another 1.5%. Not saying that that's going to happen, right? But that's why I'm pointing that out to you guys to show you that, yes, Apple is oversold, I think. Look, the RSI here is 28. Anything under 30 is considered oversold. So yes, Apple is oversold, but my job is to share with you guys what I see. And I do see that I think this long-term is a great deal for Apple, but I also can't tell you that this is the lowest Apple is going to be in the next week, because I don't know that for sure. And I like to point out both the goods and the bads. So what I'm looking for with Apple, capture of the 126.12, 89 EMA, because of the reasons I said before, it hasn't really dropped below it for too long. And while also pointing out that, hey, with the weakness in the markets, look, we're still down a little in the after hours. So depending on how futures play out, we do have run room down to the 55 EMA on the S&P 500. And that's something that I wanted to share with you guys. So hope you guys are all having an all right week. I know my portfolio has been red 3 out of the 4 days so far this week. But you know, that's okay. For me, it's unrealized right now because I'm only in shares or super long-term options contracts. I rarely play shorter term options nowadays. If I do, it's mostly day trading or, you know, running into earnings or something like that. So thankfully not in any of those. My PL still looks trash, but hoping for a turnaround here while understanding that there's still a little bit more downside. Look, RSI looks overbought, but the S&P has also got a little bit of run room to the 55 EMA, another 1% or 2 drop. So that's what I'm looking at, you guys. Hope you guys found this video helpful. If you did, don't forget to drop a like on the video, subscribe to my channel if you are new, comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.